Hi, everybody. I'm doing a quick stock market update for Monday, August 4th, 2025. It is about, I'm recording this at about 9:55 p.m. And we're going to take a look at what's been going on in the stock market. But before we do that, I have to make a quick note that this information is for educational purposes only and represents my opinion. It should not be considered investment advice of any kind. And be sure to read the full disclaimer at the end of the video. Okay, let's jump right in. Here I have a chart of the SPY, which is the S&P. This is an ETF for the S&P, so it makes a good proxy because it is basically a basket of stocks that mirror the S&P. You see that there's been a long uptrend, and this has been since about Liberation Day. I think this is where Trump made his announcements and the market took a dive and then rebounded. It has since gone to a new high. It was about 639 and the previous high was about 613 on this chart. So you can see that this little bit is the new high. This has been known as the most hated rally because once the tariffs came in, there's a lot of skepticism. And so a lot of people missed out on this rise in the markets. Let's take a look more specifically at what's been happening. If we zoom in a little bit, there has been this uptrend, which has been pretty steady, and it is what has been known as climbing the wall of worry. And last Thursday, we had what is called an outside day and then a break of this trend. So let's look at this a little bit closer. The outside day is when this is higher than here and this is lower than the previous. So you see that this range is bigger than the range previous, which means buyers and sellers thought it'd go higher and lower. This is classically a reversal sign, a reversal signal. But don't read too much into that because it could be short term, it could be long term. It's hard to say a lot about this as a reversal signal, but a lot of people look at this and consider or say that you have to consider caution going forward. So this is Thursday. By the way, here on Wednesday, we had the Fed interest rate announcement where Jay Powell decided to not do anything and not make any changes to the interest rate. This was the reaction on Thursday. And then on Friday, we had a break. You'll remember that on Friday, we had the employment report, which was revised downward. So I think off the top of my head, employment was about 77,000 jobs generated, maybe 73. Let's say 75,000 give or take. And that's not considered good. Usually it's over 100, 110,000. A really good one is 150,000 or more. The other problem was there was a revision for April, May, I think 2 months before, maybe May, June, 2 months before. And there was a revision downward of nearly 250,000 jobs, which is huge. And it's the first serious indication that Trump's tariffs are not working well. So after that, Trump fired the head of the Bureau of Labor Statistics. And of course, that was sort of basically killing the messenger. We'll talk in a second about the accuracy of those reports. But what happened was that on Friday we had this dip down. And if you take a look at it, see, this is roughly a support level where there was this is a breakout, and this is a retest of this support level, and then it rose, but it came back down here. Also, you'll notice that this has gone to the underside of this trend. So what can happen is that the market rallied today, Monday, and it can go back to the upside of this, the underside of this, somewhere around here. And so the question is, does it go up again and the market continues rising? Does it maybe just bounce around to the side? Or does it start to fail from this point on? And of course, it's impossible to know, but there are a few reasons for concern. So first of all, there's a few things to note. We're now coming to the end of earnings season. Earnings season started somewhere around here. So the bank started reporting in July after June 30th, probably around 6th, 7th, or 8th around here. And then earnings have been good in many cases, bad in others, but for the most part, it has driven the market up. But now we're at the point where almost all the major companies have reported. I think Nvidia has not yet, but Netflix, Meta, all these major companies have reported. And so we have an idea of what's happened with those things. The second thing to note is that it is the end of the month. So this was August 1, this was January 31st. And sometimes things tend to change over at the end of the month. More often at the end of a quarter, but this could simply be a timing thing where people look at the end of the month and say, what do I need to hold, what do I need to keep, or what do I need to get rid of? And so considering that there has been this huge run, and a lot of the information about what comes next has been given to us, we're looking in the next month at Jackson Hole, which is when the Fed will make a rate or interest rate decision. And that will be the 21st to 23rd of August. And most people believe that given the bad jobs report and that the Fed will cut rates in September, and whether that will be 25 basis points or 50 basis points is hard to say. If the job market continues to be weak, then it might be 50 basis points. But also the question is, how much will inflation be? And inflation has been ticking up. Now, the Fed is now in a hard place because if the jobs get worse, but inflation increases, it's going to be hard to know what to do. If the Fed cuts too much, that could be inflationary, but it may need to cut if the job market is really weak. And let's keep in mind that the Fed has a dual mandate, which is jobs and inflation. So we'll see what happens. That's hard to say. But it might be that there may not be a huge amount of good news or new good news coming. And we now know that there is weakness in the stock market. And so given that, I think we need better news for this to keep going. And then we have the risk of bad news, which may drive this down. Or maybe the market sits in a holding pattern. I personally have done some lightening up around here just because we've had this huge run, and I might miss some if the market continues to go up, but I don't know if there's going to be great news going forward. Nvidia will report soon, and that could give the market a kick if its report is great. It could be that after a big run, most things are known, and there may not be a lot of future or short-term catalyst to make the market keep going up. So at this point, we'll have to see. But those are the factors that I'm looking for. Looking for signs in the economy that is getting either weaker or stronger, and how much inflation there's going to be. And then the market is looking toward the Fed's interest rates cuts in September, which are expected. One thing to quickly mention is people might say, why did the market rise so much? And I would have to just comment that at any given point in time, even though people quote the market as reflecting the economy, it's not a perfect reflector or perfect reflection of the economy. What happened here is that there was not a whole lot of bad news if you think about it. There was a delay in the impact from tariffs. So what had happened is that a lot of manufacturers had built up inventory so they could sell it at the pre-tariffed prices as the tariffs came in. And so in a lot of the numbers, you couldn't see inflation, and you also couldn't see the job cuts that's caused by the uncertainty of the tariffs. So in this period of time, there was not a lot of bad news. And as many of you may know, Republicans were saying, tariffs, no impact, and we made all this money. And then the skeptics were saying, well, there's a delay. And there's a delay, one, in the impact of the tariffs because of the inventory buildup, and also in the reporting. So what had happened is that the Bureau of Labor Statistics, it takes a survey, And sometimes they don't get all the information the first time around, and so they have to call people back and do the survey again. And that's why the numbers were revised downward. Historically, there has not usually been such a huge drop in the revision, but it could be that just a lot was going on. There's a lot of uncertainty, and that the Bureau of Labor Statistics, what they might do is they might make an estimate, given, if they haven't gotten a response from a company, and then later on they call that company back, complete the survey, and find that the number is much lower than they thought it would be, which is basically what I think happened. So that's my look at the market. Looking forward to next month to see if there's any new news to push the market up, and I don't know of any particularly. And then the Fed rate decision, where Jackson Hole is at the end of the month, 21st to 23rd of August, and then a rate decision will probably be indicated then. And then in September, there'll probably be a rate cut. And also, we're looking for further signs that the market is deteriorating or the economy is deteriorating because of tariffs. Of course, all that is dependent on future news, so it's not a predictor, but those are the things to look for. Hope that's helpful, and until next time, this is Ming Lo with my market update. Hold on, please take a look at the disclaimer. Thank you. All graphs, charts, and tables are educational examples and are not to be construed as specific advisory recommendations of any kind. No system of investing has proven to return consistent results, and no representation or guarantee is being made that any approach can ensure profits or prevent losses. Past performance is not indicative of future results. The material represents the opinions of the author. All material presented herein is believed to be accurate, but the author does not warrant the information's completeness or accuracy, and it should not be relied upon as such. Opinions expressed may be short-term in nature and subject to change without prior notice. The author may or may not have investments in the stocks or sectors discussed. The author does not guarantee any specific outcome or profit. You should be aware of the real risk of loss of any strategy discussed by the author. This material does not take into account your specific financial situation, investment objectives, or needs, and is not intended as a recommendation appropriate for you. You are urged to confer with your own investment advisor before making any investment decisions.